Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Hello everyone and welcome back to Ask Rob and Rob, the show where you get your questions in and we answer them. Yes, it is that simple, but luckily you ask great questions and sometimes we even give great answers. This week is no exception. We've got two of those great questions on the way. But before we do, let's remind you of how you can get on the show.
Yes, it's not difficult. All you have to do is give us a call on 013 808 00035. That's 013 808 00035. Or you can go to propertyhub.net/ask. Dead easy, leave us a voicemail and you'll get your question answered. Do, however, remember to give us your name or we'll make up a silly one for you. So this first question today comes in from Horatio.
Hey Rob and Rob, I have a question for you. I've got myself into a bit of a predicament. Well, I made an offer to purchase a property 6 months ago and I've just received completion. It was actually a property in Birmingham. I've plugged my numbers in and I've realised that the buy-to-let venture is actually not profitable. So I know it's pretty bad on my side, but once plugging in the numbers, I've realised that I'm actually not even making £50 on a weekly basis. And considering all the expenses I paid for, the legal costs, putting the property within a company has cost me additional stamp duty, additional legal costs, etc. What's happened is that the property itself right now, as a buy-to-let purchase, is not profitable. I'm probably breaking even or even losing money. How do I get out of this situation? Should I wait it out? And what's the strategy I should follow to at least get some sort of profit from this? I don't think I can pay back additional amounts of my mortgage because there are fees for early repayments. The mortgage is costing a lot because it's under a company. So there's high interest rates compared to if I had the mortgage under my name. So I'm in a situation where I'm in a 2-year fixed period and not making any money on a weekly basis. I'm hoping that the capital appreciation over the 2 years allows me to remortgage and recoup a lot of the money back. But I'm not sure. Is there another strategy I should employ now?
Horatio, what's going on? It's not good news. I feel for you. You managed to do something that I see is pretty much impossible, although yet you found a way. You're not making any money from your property. Now, of course, it is possible, and there's lots of reasons why this may take place. But for the majority of people, this shouldn't really play out, because we have rental stress tests now when you apply for a mortgage. So they will check that there is plenty of buffer, plenty of cash coming in for you to be able to make a healthy profit every month. So I'm not sure why your margins are so slim. It may be that you're doing a capital and repayment mortgage. So instead of just paying interest only, you're paying down your capital as well. If that is the case, a quick win and an easy fix to this is to switch to interest only, because that's what the majority of property investors do. They have interest only mortgages. If it's not that and we just have to accept that somehow this scenario is played out, then what can you do? Well, unfortunately, there is no magic wand. We can't create more profit. Of course, check out your local rental market. Make sure the letting agent is renting it for what it's worth. There may be an opportunity to increase your rent. Go and check. Your letting agent might not be proactively checking the rental levels in your area. So go and have a look at what you're bringing in. Look at what the local market is currently doing right now. And if there's an opportunity to increase the rent slightly by, say, another £50, well, that's going to make a big difference. So you can check that as well. But really, Rob, these are small little things to try and help. But with this case, Horatio is really helping others, because the big lesson here is much more about prevention rather than cure when it comes to property investment. You've got to do your research.
Exactly. And it is so difficult to rectify something once you've got into this situation, because you can't go, oops, got my numbers a bit wrong, I'll have to charge £100 in rent more than everyone else locally. Your income is pretty much determined for you and you can chip away at your costs, but there's only so low you can go. So it's so important to get the numbers right before you buy. Look at what your mortgage is going to cost you. Look at the rent that you can realistically, not best case, achieve, and make sure that there's a bit of a margin in there. Now, in this case, this may well have a happy ending. It might be that you can break even on the property for a couple of years, then in a rising market, sell it for a really nice profit. That may be the case. It might work out for you, but that doesn't mean that it's how you should do things. You want to be making money as you go along and making money at the end when you sell as well. So that research piece is critical. And now you've had this moment of panic, Horatio, I'm sure you won't make that mistake again. Okay, let's have a listen to our second question. This one's from Nick.
Hi, Rob and Rob. My name's Nick and I live down in Kent. Firstly, thank you very much for everything that you do. All of the advice and knowledge that you're sharing is really appreciated. Is there a minimum purchase price that you tend to look for when you're buying a buy-to-let property? I appreciate there are lots of things to consider and that it will depend based on your goals, whether you're looking for growth, yield, whether you're planning to hold it for a short term, long term, etc. But is there a floor to what you would consider to be sensible? Generally, I would have thought that I'd rather have 3 properties valued at £200,000 each rather than one at £600,000. But is there a limit to this? What about 6 properties at 100,000 or 12 at 50? Thank you very much for any thoughts that you have. I look forward to hearing those.
Thank you, Nick. Great question. And you're right to flag up that there are lots of variables in there. It does depend on your goals and whether you're going for yield rather than growth and how long you're holding for and all that kind of thing. So you're absolutely right. But there is kind of a general purpose, upper and lower limit. The lower limit for most people, realistically, is going to be at rock bottom about £50,000. The reason for that is that you're going to struggle to get a mortgage on anything cheaper. A lot of lenders actually have minimums that are higher than that, but you can definitely get loans from some lenders for properties that are worth £50,000. Of course, if you are playing completely for the yield, you're willing to put in the work and the effort, and you're happy to buy with cash, there's no reason why you couldn't get a whole load of £20,000 houses. But that is going to be an extremely niche strategy. The other thing to remember when it comes to minimums is that a lot of your costs are going to be fixed. So a new carpet, a new washing machine, a gas safety certificate, things like that are going to cost roughly the same whether the property is worth £50,000 or £150,000. So the cheaper the property, the lower the rent, generally speaking, and therefore a larger proportion of the rent is taken up by these everyday kind of costs. So a lot of people, me included, would be looking at minimums higher than that, but you asked about the absolute floor, and for me, 50,000 is roundabout where it sits.
Yeah, Rob's absolutely right. When you go to different price levels, you're going to have a different experience as a property investor. Although a big thing for me, Nick, is this is going to be your first investment. Here, action is really important. Your first investment, especially if you build out, a decent sized portfolio, you'll look back on in years to come and go, why did I even do that? That's probably the worst of the bunch. But you know what? It was actually your best because that was the one that got you going. Because listening to these podcasts, reading books, magazines, going on the forum, all that stuff is fantastic. But the real lessons, the real education comes when you become an investor yourself. That's when the lessons really take hold. And that then gives you momentum to move forward and start building that portfolio out. So don't go and buy the cheapest, most horrible property in an area that nobody wants to live. Follow all the lessons Rob's talked about, but don't put it off for another year, 2 years, 3 years. As soon as you can get in at a reasonable price point, get in. Yeah, you might be able to get a shinier, nicer property if you saved an extra 20, 30, 40, 50,000. But the value of getting in, getting started, and building that experience and gaining that momentum is so much more valuable. So
that's Ask Rob and Rob done for another week. Thank you to Nick. Thank you to Horatio for those great questions. If you've got one of your own, remember, just give us a call, 013 808 00035, and we'll get your question answered for you very soon. We'll see you again on Thursday for another great episode of the Property Podcast. Until then, have a great week. Bye-bye.
Bye-bye.